Well, I mean, I think it's interesting, first of all, to circle back on, the NASDAQ and especially the NASDAQ 100. I mean, we all focus on those big names, Microsoft, Apple, Facebook, and Amazon. But if you go back and stretch back year to date, Google, Facebook, and Apple are pretty much flat year to date. And really the big workhorses of the NASDAQ 100 have been the NVIDIAs, have been the Teslas, the Regeneron, Citrix. And so I do think if you step back and look year to date, it is much bigger than just the Apples and the Googles and the Facebooks have actually lagged a lot of the underlying names in the NASDAQ. And I think the semiconductors, we've talked about this a lot. I think the semiconductors are the modern day industrials. And NVIDIA, has done incredible year to date. And I think it's just people want to own where they think there are cash flows and where there's optionality going forward. And so I think you're going to continue to see names going into the names of the QQQ, of the NASDAQ 100. We added the QQQs into our portfolios, March 26, because we feel like these have high quality cash flows. They're the modern day industrials. And you really want to go where the puck is going, not where it's been. And I think money continues to flow to the NASDAQ and their underlying constituents.
Steph, a few weeks ago, you trimmed Amazon. You put it into Alphabet. Are you looking at other places within your tech portfolio to do some trimming? I mean, Bryn, sort of stunned me yesterday by by telling us that she had trimmed Apple, that she had sold some Apple. So, are we getting to the point now where you look at some of these moves and you question the sanity of them and say that maybe now it's time to take some profits in some of these huge winners?
No, because they're executing. The reason why I actually trimmed Amazon is because they are spending aggressively, and you're not going to see the operating leverage as a result. And I've learned the hard way over the years, when Amazon decides to spend and you don't see operating leverage on the bottom line, that stock will underperform. And so I wanted to pull that back. On the flip side, Microsoft had a fabulous quarter. Google, a really good quarter. And I would just say one thing about Google. I don't think it's that people don't appreciate the costs that they can take out and that they can control. It's that they've been so inconsistent over the years. Some quarters they take and pull back on costs, and others they just go for it, right? And so you don't really have a consistent operating leverage story. You don't have a good understanding or visibility on the earnings trajectory. We know the growth is there, but we just want the consistency. So I think the new leadership is going to focus more on this, and then you add in all the other positives, which is cloud. They're a distant number 3, and YouTube, where they have 2 billion MAUs. That is very impressive that they can scale. So I think that there's more reasons to add to something like a Google. And as I say, trimming on the Amazon side, I'll hold a stub. But I think we have to be patient on that one.